The Crypto Report, everybody. I am Crypto Kip, and today we are going to be talking about a real conversation about these Fed rate hikes. Because, folks, there's a truth here coming up. Yes, September is typically bearish for crypto. We are seeing a little bit of downward moves now, but I've been predicting that the Fed is going to raise the rate hikes this next FOMC meeting, which is going to cause even further downside, potentially to make it a very bloody September. But there's the flip side of that coin and the world where Fed Chair Jerome Powell does not raise the rates. We're going to look at some of the language that the Fed Chair Jerome Powell used recently, look at the probability of a rate hike, and dig a little bit further on this today. And we're going to take a peek at the overall market and see what everything's doing. Bitcoin, crypto, the altcoins, of course, and the S&P 500, because I think that's important as well as you're preparing for a big macroeconomical decision like a Fed rate hike. It's going to affect the crypto markets as well. So we like to look at the S&P 500 here to kind of really get a full gauge of the entire picture. There are a couple breaking news stories today that I want to share with you guys as well. A couple hackers, a couple big news stories in crypto, which we see a lot of. But I want to share with you some of the latest, some of the greatest, and what I see coming ahead, guys. That's going to be a lot of fun. Let's get into it, guys. If you want to stick around, smash the like button, subscribe to the channel. I'll give you guys some price action here, and we'll get into some of these breaking stories. Thanks for joining, everybody. Welcome back. Good to have you. Okay, so today, guys, really not a lot of volatility in the crypto market this morning. We are seeing Bitcoin at a steady $25,000 and change, below 26K here, $25,700, and it looks like we really do have a chance of breaking down further, but we're really going to have to look at that Fed rate hike at the end of September to see kind of where we go next. So we'll peek at that in a second. But Ethereum at the low F of $1,600. I do have some cash on the sidelines. I'm ready to buy this dip, but I do think we come lower, folks. In the meantime, on the last 24 hours, you'll see that there are some gainers. Stacks is one of them. Thorchain, Neo, which is a big project that I held back in the day. My first bull run, Neo, was like my biggest holdings, even more than Bitcoin. My very first bull run, because I didn't understand at that time that Bitcoin is king. You got to have your Bitcoin. So I was holding this little alt Neo, which I thought was going to be like the Chinese Ethereum. This thing still might have some success, but just funny to see this thing pumping today. There's so many little coins, guys, that you may never even heard of. Maybe that's one of them. But yeah, I mean, what I did, and I learned a lot. Like, this was my first time kind of learning about the effects of a buy the rumor, sell the news event, right? So there's this Neo was used to be Ant shares. They rebranded a Neo. Upon the rebranding, it had a pump and then a dump. These are some of the early stories that I experienced in crypto. But anyway, right now, only a couple gainers on the market. Nothing's really going up in a big way. Typically, we'll see something up like 30% on a day, on any given day, but we're not really seeing that today because Bitcoin's kind of going down. As for, Bitcoin, yeah, 0.58% downside. Let's see what the top losers are for the day. Toncoin down 6.6%, Mantle down 5%, IOTA 4%, Rocket Pool down 3%, Uniswap down 2.8%. So, nothing crazy horrible today, and certainly nothing great. Why? Because everybody's just scared right now. Everybody's scared for September and for the Fed Chair Jerome Powell specifically. And so what we're looking at on the chart for Bitcoin right now is it looks like it's trying to kind of waterfall off this edge right now, and it does look like this thing might kind of come down this way, a little waterfall action, something. And so we could see that coming very, very soon, guys. The realistic truth of it all is, guys, is that we could end up seeing, we really could, guys, we could end up seeing a $20,000 Bitcoin on this next dump. Is it possible? Certainly, because you look here and from March to, just in March, just from the, end of February, let's say March 1st to March 10th, in 10 days, we saw Bitcoin tumble down a good 16%. Could we get something like that again? Absolutely, guys. Absolutely. And the other thing I want you to remember is we could see even further downside because $20,000 is very, very important. We've broken above and below $20,000 quite a few times. It was the previous bull cycle top back in 2017, 2018. Over half a decade ago. Like 7 or 8 years ago. Unbelievable. So this is possible. I just need you guys to know this. This is something that we could see. And we could see the other side of this. Let's say that the Fed doesn't raise the rate hikes, which we'll get into the possibilities there in a minute, but we might just see this thing come down to 21 or 23. They don't raise the rate hikes. Maybe things get bullish and we rally back up. Maybe that's our bottom. But I really do believe that, we got to keep an eye on the S&P 500, guys. And so right now we're starting off a little bit red on the week. We'll see how this continues to play out, but I do believe that this could come down a little bit further in anticipation for Federal Chair Jerome Powell's conference later this month. And that is coming up, guys. And it is coming up in exactly 15 days, 4 hours, 1 minute, and 15 seconds from now. So at this point in time, there's a 95% chance, according to this CME Fed rate probabilities calculator, that the Fed won't raise the rate hikes, which is so interesting to me considering Federal Chair Jerome Powell's language. There's a 5% chance that they'll raise it by 0.25%, 0.25%, guys. Do I think that the rate hike is coming? Yes, I do. But economists certainly don't think so. And I leave myself a little bit confused. Like CNN is saying the Fed won't likely raise rates this month, but November is another matter. I watched this little video on it, and there wasn't a very good explanation of why they say why. But last week, economic data increasingly gave investors hope that the Federal Reserve could hold interest rates steady this month, following a rate hike in July that brought our rates to the highest level in 22 years. But the Fed hasn't ruled out an additional rate increase, and that could still happen unless inflation slows further. I don't know where they get the unless inflation slows further thing, because at the end of the day, let's look at exactly what Fed Chair Jerome Powell said. I think that's the key here. We got to be specific. We got to look directly at the facts, and let's do that. So Fed Chair Jerome Powell calls inflation too high and warns that we are prepared to raise rate hikes further. Immediately, you're going to see a contrast. They say unless inflation slows further. Now, we're just in headlines, so let's read more into the details, guys. Let's read more into the details. So here he is. This is the meeting. It was back at Jackson Hole just a week or so ago, and we did a live stream actually while this was happening, and we were kind of taking notes of the news as it broke, which we saw was bearish. And as he was doing the news, I was saying, hey, this sounds like he's going to raise the rate hikes, because that's the language that I heard. Let's look at some of the words that he used, guys. Although inflation has moved down from its peak, a welcome development, it still remains too high. We are prepared to raise rate hikes further if appropriate and intend to hold policy at a restrictive level until we are confident that inflation is moving sustainably down towards our objective, which is 2%. Powell also said that he warned that some pain was likely coming as the Fed continues these efforts. Also, he said that the lower monthly readings for core inflation in June and July were welcome, but 2 months of good data are only the beginning and what it'll take to build confidence that inflation is moving down sustainably towards our goal. So there's still more, and he is acknowledging that there are two sides. Two sides meaning doing too little, which means not raising the rates enough, could make inflation become entrenched and ultimately require monetary policy to wring more persistent inflation from the economy at a high cost to employment. But doing too much could be doing unnecessary harm to the economy. You don't want to raise the interest rates too much, because then nobody can get loans and nobody could borrow money, and then the economy is really going to hurt. The economy is hurting. As the Fed raises the interest rate, the economy is hurting. But not raising the interest rate makes inflation never go away. And that's not what we want. So he is open to anything, and he wants to assess the data. So truthfully, guys, that does leave the possibility of either scenario on the table. It could happen either way. He could raise the rates or he might not. I say that he's more likely to raise the rates based on some of this language, guys. It's going to be interesting. He keeps saying things like, given how far we've come at upcoming meetings, we're in a position to proceed carefully as we assess the incoming data and the evolving outlook of risks. They're going to base it on the totality of data and evolving outlook of risk. It's the same thing. He just keeps saying the same thing. Again, await further data. He just keeps saying the same thing. But he also said, some people are saying the basic thought is that they're close to done. They think they probably have a little more to do. And the story is they've been telling us that for a little while, which and if they've been telling us for that for a little while, then they've raised the rate hikes. We've seen the rate hikes consistently get raised. I think he really just kind of rode the line here. But, people will admit, was he hawkish? Yes. But some people say, last year he took out a bazooka and was way more hawkish, and that caused a lot of selling. I mean, was he more or less hawkish last year? I don't really know. I'll tell you, though, given where we're at right now and given what he's been saying over the last couple of months, he's been saying there's 1 or 2 more rate hikes. That language changed. Now, he said again, after a rate hike, there still might be 1 or 2 more rate hikes, which leads me to believe that he wants to just kind of raise them again. So I just don't see where a CNN article could come out and somebody could say, hey, he is not going to raise rates this month, but November's another matter. I mean, they do have this Fed rate hike probability calculator. I just don't know how they got to a 95% chance. Because if he was still hawkish, then wouldn't you think this at least would be at a 50% chance, or at least at like a 40% chance, and the chance of a rate hike would be more towards like 60%? Because that would make sense to me. So what I'm seeing in the data right now just doesn't really make sense to me, and I wanted to share it with you guys because I think it's important. If you're trying to consider where the charts might go, where this market might be headed to, then I think this conversation about rate hikes and Federal Chair Jerome Powell is extremely important. It's extremely important, but we will have to just see how it ends up. In the meantime, when we came down, we did have a big liquidation of about almost $1 billion were liquidated, and then a couple little short squeeze and long sleeves. Really not a lot of liquidations happening right now because there's very low market volatility. And once we do get a move to the downside, say we get a move to $20,000, you're going to see another big long liquidation, probably somewhere in the ballpark of $800 million, probably, somewhere around that. And the truth is, guys, is regardless of a rate hike, we have expected for a while now that September is going to be bearish, just based on the history. Looking at Bitcoin's moves in the last 10 years, in the last decade, going back to 2013, we're typically bearish. And now with this Fed rate hike situation coming, like even if the Fed doesn't raise rate hikes in September, it makes you wonder, if the Fed took a bazooka, like they said, to his speech into the rate hikes back in October of last year. Could he do that again? Well, even in October of last year, look, it went up. Now, maybe he raised the rates at the end. So, November was bearish because of that. So could we get something like this again where maybe October's fine, he raises the rates, and then November's bearish and December's bearish? Anything could happen, guys. But in the long term, we know that a bull season's coming, guys. We know that a bull market is coming. You look back at some of the previous bull seasons, 2020 and 2021. Look at these quarters. You have some huge quarters, 43, 17%, 168%, 103%. You've had some fantastic times. And lately, we just started to heat up. Like we just had our big Q1, 71%, 7.719% in Q2. Q3 is down right now. And then Q4, who knows if it's going to be down or up. Typically, Q3 is down. Typically, Q4 seems to be up. So we might go up in Q4. But again, Fed Chair Jerome Powell could be having a negative consequence on that. So we'll have to see how that plays out. It's a very big decision, guys. You can look at all this data, but you, at the end of the day, might not ever know what happens. Now, there was a big hack yesterday. This crypto casino stake actually was hacked for $41 million. And some people are talking about this. At the end of the day, guys, not your keys, not your wallet. If you're holding in a crypto exchange or in a crypto casino, you don't have, the access to those funds. So you have to trust them with the custodianship of your funds. Now, Stake did say that all customer funds were safe and that they fixed the hack. But, hacks happen all the time in crypto. In fact, MetaMask scammers are trying to take over government websites, apparently, targeting crypto investors. Government websites in India, Nigeria, Egypt, Colombia, Brazil, Vietnam, and others have been found redirecting to fake MetaMask websites to try to steal your cryptocurrency. So be careful, guys. Anytime you're clicking on links in crypto, it is a big deal, and you got to be aware of it. Sometimes, they're very sneaky. Sometimes they're very, very good at getting you. But I just want you guys, especially as a crypto holder, be careful when you're clicking on links. You have to do your research diligently and make sure that you're not getting scammed. And I guess it's crazy because these are government websites. At the end of the day, we still have a long way to go in trying to figure out how to counter some of these crypto scammers. But I want to talk about some of the biggest crypto scammers out there. And it turns out maybe it's lawyers. Maybe it is the lawyers for the FTX case. This was an interesting story by the New York Times I want to share with you. A $700 million bonanza for the winners of crypto's collapse. Lawyers. Bankruptcy lawyers and other corporate turnaround specialists have gotten major fees from bankruptcies of 5 cryptocurrency companies, including FTX. Now, this is what I want you guys to understand. And it's pretty interesting. So, this is the truth, guys. You can look down and see, here's the fees. FTX, there's been $326 million earned by the lawyers. Celsius, $186 million, a lot for Celsius. Voyager, $88 million. BlockFi, $59 million. And Genesis, $52 million. $713 million has been earned. Now, large fees are common in corporate bankruptcies, which require complex and time-sensitive legal work to untangle. But in the crypto world, the mounting legal fees have sparked widespread outrage because many of the people owed money are amateur traders who lost their personal savings rather than corporations with the ability to weather a financial crisis. Every dollar in fees that is deducted from the pool of funds that will be returned to the creditors at the end of the bankruptcy. So in other words, guys, that's $700 million of investors' money. So these lawyers are just going to make a lot of money. Meanwhile, how many billions of dollars were lost in this lawsuit? Well, it's almost $1 billion less now that the people that lost the money are going to get reimbursed. And so let's just pretend it was $7 billion. Well, then 10% less is what you get. So it's crazy. It's not right. It's not ethical. It's sad for the crypto holders, for crypto people that got scammed in this FTX deal. But it is going to be, I really hope that Sam Bankman-Fried gets got. I really hope that he gets got. Now, I think he will. I think that he's going to jail. I think that increasingly so we've seen more evidence that this is destined to happen. And then we can kind of get on with our bull market. Some people are predicting a 10 to 20x Bitcoin grow by utility surge. Now, I think he's talking about Bitcoin's possibility for building on it. Some people are very, very excited about Stacks. Stacks is actually a coin that's up today. It's a layer 2 solution for Bitcoin. People are building on Bitcoin with BRC20 tokens. I've actually got a couple BRC20 tokens. You've heard of an ERC20 token, Ethereum-based tokens. Well, there are BRC20 tokens too, and there are BRC20 NFTs as well. So there's a lot going on Bitcoin, and I do think it's exciting. And regardless of if you believe that Bitcoin's going to go up because people are going to build on it, which is an argument to be made, some people also love Bitcoin, don't love the idea of building on Bitcoin network because it might slow down the network and cause congestion. But even if you don't believe that building on Bitcoin is the future of Bitcoin, a 10 to 20x really becomes possible for Bitcoin just in that it's probably more valuable than gold. You see some of the most notable names out there that have discussed this. And frankly, guys, this is something that I believe in strongly. I think that Bitcoin is better than gold inherently. It's easier to use. It's easier to store. It's safer to store. And it's easier to transfer. Now, if Bitcoin passes the market cap of gold one day, then Bitcoin could have a 25x and go up to a $662,000 price level. And that would be spectacular. And it's something that's certainly possible, guys. In the meantime, altcoins are suffering as Bitcoin's going down and as Bitcoin's prepping for a bull market. Altcoins are suffering because at the end of the day, until Bitcoin goes up, Crocoin can't really blast off yet. It can't. Now, the game launched. The game is good. People like the game. The game's successful. But that alone isn't going to send the price of Crow up. What we really need is a Bitcoin bull market. You see Crow is falling versus Bitcoin. I personally believe that there's definitely some chance of maybe a 25% correction of Crow versus Bitcoin still. Possibly down to the target of 3 cents, which we've been saying pretty consistently now. But the real question is, guys, is the Fed Chair Jerome Powell going to raise the interest rates? And really, only time can tell, folks. Only time can tell. Good morning, everybody. Club Crow, Cowboy Crypto. Good to have everybody. Thanks for joining, folks. If you're new to the channel, I'm a little tired this morning, but we are doing live streams every single day, Monday through Friday, at about 8:30 a.m. Central Standard Time, guys. It was a little bit later today, but, right around then, turn on your notification bells. I will be putting out live alerts for you guys on Twitter or X app, Elon's X app, if that's what you want to call it. So make sure you follow us at _ Crypto Report on Twitter. You can follow me at CryptoKips Tweets on Twitter, and my partner on the channel, Black Sea, at 333 Black Sea on Twitter, guys. Make sure you check it out because we are doing a lot of crypto updates on Twitter. I think it's a great opportunity for us to have a chance to not only talk directly to our community, but also so that we can share some of the greatest and latest news that's going on in crypto. And that's kind of what we're dedicated to here. I mean, we named this channel the Crypto Report because we really, really want to just be giving news updates to everybody out there. I tweeted out the live stream this morning showing you guys that we're doing it. Rest in peace. By the way, rest in peace, Steve from Smash Mouth. Died from liver failure, which is terribly tragic. Did another live stream yesterday, as you can see. Did alerts. Hey, floor price going up for the most rare loaded lion main city land deed. That was intense. You also saw that the game was trending. I'm letting out news that way. I want to interact with everybody. I'm going to put out memes. I'm going to put out conversations just like this about the Fed raising the rate hikes. You see that I've been pretty consistent here. I really do believe that the Fed is going to raise the rate hikes. And I'm having a hard time to believe that there's a 97% chance, and now today reading at a 95% chance, that the Fed is not going to raise the rate hikes. I just see them doing it. I'll keep sharing this with you guys. Share my honest opinion. So check it out on Twitter. Black Sea also has been doing giveaways on Twitter. I don't think he's doing it right now, but he just did a giveaway, and he ended up giving off a land here. I think he did let me see. Yeah, he gave away, he was thinking about giving away a molten cavern, and he just did a dune. So he just gave away a dune. He's looking at giving away a molten cavern, guys. So it's worth following us because there are giveaways and there is news that comes, and we want to just keep you guys up to date with all that. So what else is going on out there? What are you guys up to? What coins are you looking at? What questions you guys have? Doing a little Q&A if you guys are interested. Guys, it's a new week, new weekly candle for Bitcoin. I think that right now we're at a good time. If you want a dollar cost average, seems like a good time. There could be more downside, which is what I'm preparing myself for. But in the meantime, Bitcoin is coming down, guys. Am I scared? No, I'm not scared. I've been in this market for a long time, been through a lot of waves. I'm just excited. I'm patient, and that's really what it takes at the end of the day, guys. I say at the end of every single video, DCA HODL, because that's really some of the best strategies you can have. I have it up there too, dollar cost average. I wrote it up there out of the gates. We've had this as a motto on our channel for a long time because I think it's the most important motto no matter what market you're in. If you're buying the S&P 500, if you are looking at something else, I think that it's important. If you're trying to get in real estate, you can kind of think of it the same way. Just kind of getting off zero. Time in the market does beat timing the market. You don't want to take too much risk in that, right? And over leverage or take too many loans out. But time in the market beats timing the market. And certainly good timing. It's down. We're not back up at $30,000. But, you know, I mean, if you were buying at the peak fear, which we talk about, you know, you buy when there's blood in the streets, you would be up right now still from the FTX collapse a whopping 60%, which is incredible. And even if we come down to $20,000, you'd still be up 30%. How crazy is that? So even when we come down to $30,000, if we say we come down to $20,000, guys, I'm going to look back at this. I'm going to go, how could you be complaining if we're at $20,000? You had a chance to buy 30% ago. If you only took advantage of the prices when you're up here, well, then you don't deserve to be as happy down here because you didn't take advantage of the prices down here. The truth is, guys, is we need to dollar cost average. If you buy, you know, here, 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 and here, your average price is going to be like, you know, probably right around here. It's probably going to be right around $22,000. And that's great because then you didn't have to spend $24K on your purchase price. And unfortunately, though, you didn't get it for only $20,000, but at least you didn't get ripped off and you didn't only buy it when it was high at $30,000. So you're just better off dollar cost averaging, guys. That's what it is. You buy the peaks, you buy the lows, you buy the in-between, and you'll just get a nice average buy-in cost. And typically, that's going to outperform people that are trying to time the market. Again, part of the reason people say time in the market beats timing the market. Zombified says, you need money to make money. You do need money to make money. That's true because in order to invest, you got to have a dollar. So, you know, we want to get you guys ready to make money in this bull market. If you do have a job, if you do have income, to dollar cost average in and buy. The whole goal of this channel, guys, is to just entertain you about crypto first and foremost, educate you guys on some of the news stories that are going on. It's not financial advice, but you will kind of get our take from two guys that are trading crypto on a regular basis, have been in the market since 2016, and kind of what we anticipate coming up next. It's going to be a wild ride. It's going to be a lot of fun. But yes, Sushi Satoshi says, I take emotion out, and DCA. That's the move, guys. We'll leave it at that. DCA, folks, that's all I got for you in this run. I am Crypto Kip. This is the Crypto Report. Don't forget to smash up the like button, subscribe to the channel, and as always, folks, you got to remember, DCA, HODL, and we'll see you in the next one. Thanks, everybody. Have a great night. Thanks for joining us this morning. We'll see you next time. Peace.